Hey, what's up, G? Welcome back to another analysis video. So, a lot has happened. Yesterday, we predicted how we were creating aggressive high lows in this area, creating sort of a ascending triangle and looking for a leg up to claim liquidity above this high. As you can see from the yesterday's video, we discussed this scenario that played out very well. We had a liquidity grab above the highs, and it was a really sharp move. Didn't really trade this, just had a massive quick move up, close 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 along the point of control, and had a massive dump today back to the previous range. Had no reactions on the way, just kept rolling down, and right now we are back in the previous support range. We are in this ascending trend line, and if we take a look at the volume profile from this range, you can see we are hovering right over the value area high of the range. So the thing is, there's quite a lot of liquidity below these three lows. So if we eventually move down, so a failed breakdown from this area would give you a good longing opportunity in my opinion. But right now in the immediate short term, you are just calming down after the massive move you had the previous hour. So we are back in the range, creating a massive corrective move, also forming a Gartley pattern. Right now we target right over the 618. That would bring us to this resistance again, this white line. So that's something to look at, but predicting such a large move is not necessarily the easiest thing to do right now. But what we can do is, if we do get sort of a volume breakout from this area, this daily level, as you can see, this was also a point of control, naked point of control from this area. If we take the volume profile, you can see we also had the naked point of control, and on the daily level also had some Fibonacci levels, but we just decided to roll down back into the range. Now we're trading back in the 26,000 levels. So right now we could be coming down to claim liquidity below these lows. If you're longing, be cautious, as you may just come down to claim liquidity below these lows and enter into a bearish trend. Right now, this equity move didn't really have a lot of volume on the 15-minute time frame. As you can see, the bullish volume was way higher than the corrective volume, but right now we're back in the range, just consolidating for a bit. Eventually probably gonna come down to claim this low and even lower, but in the immediate short term, if we move on to the 5-minute time frame, doesn't really look tradable. But as you can see, we do have sort of a mini Gartley pattern, but it's obviously a really high risk trade. Take a look at what's gonna happen on the 5-minute time frame. The bearish volume is arguably low, so but the volume could kick in any time. Just looking at immediate trading scenarios, we have some resistances, we have some supports. Taking a look for a break above this distance for a possible long, also including the Gartley pattern. But obviously trading just off this Gartley is really bad, as there's liquidity below these lows that I do think is gonna come fast and claim it all. But if we do also take the Fibonacci extension from the highs, we are at we've broken down below the 1 to 1 ratio, and the 1.618 is approximately below those lows, and also the point of control is right beneath us, so we are just getting minus spotted from the value area high and the Fibonacci level. I'm guessing it was from this low. If we take, okay, so even, yeah, we're both seeing from about the 618 from this low. We could easily fall more down, but for the immediate trading scenarios, let's just take a look at the minor supports and resistances. Let's just get rid of this white line. As you can see, we are bouncing off of these highs right now, clearly bouncing off of these highs. Let's just change the color to more visible one. Okay, so we're bouncing off of those highs. I wouldn't really be interested to short a break of this port, as it is just very low, and you could have high stop loss and jump into a trade, but it's very low in the market, so I'd rather move to the bullish side. So two trading scenarios I instantaneously saw were a liquidity grab below these lows for a push up. Of course, that would give you a good risk to reward trade, coming up to these highs and possibly higher, invalidating the Gartley pattern, of course, or even a break above this resistance, bang, and just come down, have some 618 Fibonacci levels. That could also give you a trading opportunity, but yeah, really low volume, bro. Bearish volume was really low, but we just kept crumbling down. Also had some PCE data coming in. Data was neutral, but we just decided to have a bearish momentum today. So yesterday we obviously discussed how we were gonna break above the resistance and arguably claim these highs. You can see it in my previous video, and we did exactly that and got rejected off of the point of control area, closed slightly above and just came back down, filling up this volume gap. We just had a bang move up out of nowhere. It was like 30 minutes before the data, and also creating sort of this Gartley pattern, but it wasn't really tradable as it was a really sharp move. It was a really quick move, also claiming these lows. I was expecting a pump from this area, claiming this low, but we just didn't have a swing failure and just had a massive red candle to the downside, invalidating the swing failure, of course. So right now we just are consolidating in the range, had a massive lower high on the macro time frame. If you take a look on the 1 hour, we're just creating this sort of lower highs. Had quite a push up yesterday with the volume, considering the data, the Bitcoin ETFs news, but right now anything could happen, and the only good trade I see is a swing failure below those lows or break above that high, this yellow line over here. So the point of control and the naked daily level, if you focus on the daily time frame, as you can see, we had a daily level just popped below them, and we just having the daily level at the point of control at that area. What I'm really interested is obviously these lows being claimed. Whenever lows are made, like in a ascending or descending order really close to each other, there's tons of liquidity below them, and market often dumps, sweeps the liquidity and has a pump to the upside. Exactly what happened in these highs. We were creating these slightly lower highs, market jumps up to the level, had this swing failure off of that level and just crashed down. Wasn't expecting such a major correction, in my opinion, to be honest. I was expecting an Elliott wave theory to play out, as it was a third wave and was waiting for a bounce off of this area for the fourth corrective wave. But at the end of the day, gotta protect your account and have good risk management. Of course, anything could happen. The best trades go wrong, but right now we are just consolidating, creating some boring price action after this major bearish candles. So are we coming down to claim liquidity here, or is this just gonna be a massive high low double bottom? Is the question. I do personally think that at least the medium time frame lows could be claimed for a push up, at least a minor push up. You could always roll down to claim more liquidity. These moves happen in Bitcoin every single week, and you gotta protect your position in them. Be patient for the trades. I was looking for a swing failure off of this low, but as you see, I was patient enough and we just didn't have the swing failure, just created a massive red candle and just decided to drop. If you're patient, you will have a better trade. If you're eager, you might have a wrong trade. You might want a good entry on the trade, but the trade entirely may go wrong. As you see, if you're entering this here, just hoping that it becomes a swing failure pattern, the market does not do that. It just rips you apart. You gotta be patient and wait for the confirmations, the indications, and just jump into the trade then. So right now we're just hovering around this area. Nothing much, just for scalping opportunity. Of course, you could claim this low and just have a swing failure. If you have some divergences, you could jump into a trade, but on the macro side, you'd have these three beautiful higher lows that have tons of liquidity below them. As you can see, this is all the liquidity that we have, and we could easily drop to claim those and then have a push up, in my opinion. So stay defensive, be cautious with longing. If you do have a minor swing failure with some CVD or the market cipher B divergences, I will consider entering a long even here, but with a really smaller size and tighter stop loss. Of course, we had a perfect bounce over this resistance. Also taking a look at volume profile, we had a really high volume counter control over here. Had this volume gap, so this area was not respected. Of course, high volume node over here, but we just ripped apart and we got rejected from that area right now. And if you break above that, of course it's a sign of minor strength and you could enter a long position or the retracement, all depending on the volume and the Fibonacci levels, VWAPs and everything else. These four lows, I think, are a golden opportunity for a trade, in my opinion. If you do have a swing failure off of those, you could have a easy good risk to reward trade. Obviously waiting for the confirmation of the swing failure, not just jumping into that big red candle that could just burn your account if it just decides to come down. The market just, once the market is just going to break that level and entering early is gonna burn your account. See, right over here we did have some sort of confirmation as we are closing below the highs, but arguably it was sort of a weird trade. If you are entering this, we did have some high volume green candles on the lower time frame, as you can see right over here, so you will have to put a stop loss right over there, almost a 1 to 1 risk to reward trade projected, and considering the high green volume, it was sort of risky, but we did manage to come down, and that was a trigger that we are going to go down. As you can see, we were trading below this range since yesterday. We broke above, and that was a confirmation for a bullish trend, but we just crumbled back down, and that was a sign of major weakness. So we just got up to the level. If you move on to a 3-minute time frame, arguably this was a trade, as you have the as you're breaking the level again after a high volume green candle, you're facing back. So this was arguably a good short position right over here. If you're taking count this, it was obviously a projected 1.5 risk reward, but you can always leave a bit of the position open and make a killing out of the market. But obviously you have to move your stop losses to break evens and have good risk management always. So the moving back down of the market back down to this resistance, breaking this was a trigger for a bearish momentum trend. We just had sort of a ABC type of correction after the pump we had, so it was quite an aggressive correction with low volume, of course. But yeah, this was arguably a good trade. Also taking a look at the fixed range volume profile from this range, you had some high volume candles over there. To exclude this momentum, yeah, the point of control was right at a level, and you could have jumped into a short position, in my opinion, slightly away from the VWAP, but it was worth shorting considering the breakdown of the support level back down with high volume. So that was just pretty obvious for a corrective move coming down to claim these lows. We also had a swing failure off of this low, but it was arguably a bad trade because there's just tons of liquidity below this low, and when it hasn't been claimed, and even this low had tons of liquidity below it. So this low was arguably claimed. We slightly tapped it on the balance chart. We have some wicks below on the other charts, the Bybit chart, but this low had tons of liquidity below it. We just crumbled down, didn't have a swing failure. You gotta be patient for the confirmation for a appropriate trade. So right now, those are the two trades I see. As I mentioned earlier, it's a long position right over here. If you break above, all depending on the volume and the retracement, you need a high volume breakout, obviously, and retracement with low bearish volume for a good trade. That is exactly what happened over here, and what happened right over here. These two trades were the same strategy, and the other trade, of course, is a liquidity grab below these lows. You could have good risk management or the swing failure trades, aiming for approximately, if you're coming below these lows, obviously you're invalidating the Gartley pattern. You really want to defend your position as you get green, because it could just crumble down always. You have these four lows, a wick below them would just turn into a falling down session again. So you want to protect your position always. It's quite low to short, in my opinion, but you could always have good risk management. Now taking a look at fib from this level, if we come down to this lows and then claim liquidity, just crumble back up, I think this level would be a level to reconsider entering a short position, as you're at a major resistance off of this high, this low, also this 618 from this pivot that we created today. So this would be the end of the projected move. Of course, you could always leave a position to aim for the moon, but that's just a projected move that the trade could at the end of the day reach to. So that's basically it. We also have this godly pattern in play right now, but I'll only enter the trade if we have a good volume breakout above this high, retracement with low volume, aiming for a 618 or even the high, of course, or will quickly grab below these rows. So that's basically it. We could also have a high low double bottom scenario as we did have in the 15k range, where we did have a aggressive drop. As you can see, I'll show you right now. Yeah, so we did have an aggressive drop down. We were just consolidating, came up, claimed a bit of lows, and just had a roundish formation and just went to the moon. That could also be in play, but in the immediate short term, you gotta mark the resistances and your support levels, wait for the price to move in certain direction, and then take your trade according to your indications and your strategy. That's basically it. I won't be particularly interested in longing this level exactly. I do think these lows are going to be claimed at some point, or at least this low for a minor scalping opportunity is, of course, with good risk management. Don't want to just get drowned and get stuck in your long position as your market just crumbling down. So that's a reminder for you to have good risk management. That's basically all has happened. Let's just take a look at what the market does today. Keep an eye out for the trading scenarios, and I'll see you in the next one.